Now it is about time for us to move to the computer screen for me to explain the simple single signal structures for entries as well as exits. Now please make sure that you draw the structures into your notes. This is extremely important, and if you need to pause the video, please do it as much as you need, and pause the video as many times as you need, because these are the core structures, the basic structures that you're going to be looking for in the indicators when you're going to be trading. Let's move to the computer screen and let's take a look at this day right here in front of us. And finally, we have both the MACD and the stochastic. So we are going to be, of course, using the combination of the two. And as we can see, the day began around 9 o'clock, the market opening. We moved down, a downtrend, then we turned into an uptrend, and then we have slowed down and we have a side move right here. Now, as you could see, if we use the wave structures and comparing the waves, then we can see a wave here, number 1, wave number 2, and wave number 3. And here are the correlating waves in the MACD. The first wave, super small, but the second wave, and then the third wave. And the same thing goes for the stochastic. Here is a wave, and the stochastic is actually a lot more sensitive than the MACD, so it actually shows even this wave right here, which I didn't even notice it as a wave, but the stochastic shows us that there is a wave. There was absolutely nothing in the MACD. So yeah, as you can see that the stochastic is a lot more sensitive. But anyhow, this is the next peak that correlates to this wave right here. Then this peak, it correlates to the one right here. And as you can see in the MACD that there is already a divergency. Let's say this wave, and here it is in the MACD, it is diverging with both this wave and this one. These both waves are lower than the one before, than this one here. However, in price, they are the same level or even slightly higher. So this is already a divergency. But this is not a signal just yet. It is a weakness and it shows us potential for falling, but this is not a signal yet that I'm using for my actual trading. The signal is in the MACD. It's not a crossover, it's not a divergency. It is a wave above or beyond the trigger in certain conditions. So write this down word for word. A signal in MACD is a wave above or beyond the trigger line in certain market conditions. And as far as the stochastic is concerned, we are looking for the stair structure, so the stairs going down. Here is an example. Here is this wave, and now we can see this wave is lower, so this is already a stair down. But the next wave, the next peak, the stochastic, once again, those are not waves, I call those peaks. This stochastic peak, it is slightly but higher than this peak. So we don't have so the model is broken and we don't have any stair concept. And now, as you can see here, this one is even higher. And unfortunately, this shows me a weakness for the concept of falling prices. So the MACD is showing some kind of a divergency, but the stochastic, it's not sure. It's showing actually some stairs up, as you can see. This one is higher, this one is higher, so we have stairs going up. And so the bottom peaks are showing the same thing, the stairs up with these two bottom peaks, this being higher than the previous one. So the MACD is telling us, showing us a weakness for falling, but the stochastic is showing us that we are uncertain and perhaps will continue climbing. So in this kind of a scenario, it's quite difficult to make a correct decision. So we need a wave beyond or above the trigger for our actual signal. So let's see what happens next. And here, as you can see, we are forming the perfect shape that we are looking for. With this, as this candle finishes, we develop the wave beyond the trigger. So once again, remember that the orange one in my indicator settings, the orange line is the trigger line, and the blue line is the MACD line. And here we can see that there is a wave beyond a trigger, and this is our signal for falling. And as you can see in stochastic, there is finally a stare down. We had an uncertainty here of potentially going up. However, if we look at a general picture of this piece of the market, then we can see this peak, then we can see this peak, and then the next peak is this one. So we do have some kind of stairs down. And this one here looks fantastic because this peak is beyond 50. And this is what I love to see. I love to see the hooks in stochastic below the pink zone, the neutral zone, or at least in pink and not above pink. So, something like this, the hook like that, which goes all the way through the neutral, it is okay, but the lower, the better, for falling, of course. So the beginning of the next candle will be our entry into falling prices. So there it is. Once again, as this candle finishes, we have our signal, and this is our entry. Now, this is extremely important to understand the difference between the signal candle and the actual entry candle. Those two candles are absolutely different. The signal candle is the one that has shaped our signal, has created the reason for entry or for an exit, but in this case, for an entry. And only the beginning of the next candle is our entry. We never, write this down word for word, we never enter in the middle of the candle. At least in the indicator trading. In other types of trading, we will be entering in the middle of the candle. But for the indicator trading, we never enter in the middle of a working candle. We need to see a signal, and this signal needs to complete. So the candle has to finish, and only then we have a signal. A working candle that is looking like a signal, it's not a signal yet. It becomes a signal only when it finishes. So, and by entering at the beginning of the next candle, right the second when the signal candle finishes, we click buy or sell. And in this way, we enter at the soonest possible time into our signal. So once again, two candles, signal candle and an entry candle. And we enter only at the very beginning of the candle that comes after the signal candle. So signal candle, it finishes, the next one opens, we click, we buy or sell, we enter. Now, in many platforms, especially as you can see here in the Pro Real Time, we have these interesting looking bars at the zero line of the MACD. And we have the red bars and the green bars. Those bars are actually extremely useful and extremely helpful. These bars, they represent the distance between the trigger line and the MACD line. And that helps us to identify if there actually is a signal. And this is very important because what I'm showing you right now, it is a beautiful, really nice signal. However, there are signals that are less beautiful, that are sometimes even hard to see, and visually can be quite difficult to identify and see, and you'll have to be breaking your eyes to see whether the MACD is moving away from the trigger, is it creating a wave above or beyond. In this case, it is easy to see, but in some other cases it might be quite difficult, and this is when we are going to look at these bars. So it's logical that if we want a wave beyond the trigger, we need these bars to be decreasing, and with the next one that is going to be larger than the previous one, we can say for sure that we do have a signal. And as you can see, just pause the video if you'd like, and you can see that this bar is correlating with this candle right here, and it is larger, slightly, but it's larger than the previous one, and this confirms that it is in fact a signal. So the MACD is moving away from the trigger, and it is creating a wave beyond the trigger. And in this way, our entry is going to be at the beginning of this candle right here. And let's see how it plays out. Oh yes, and of course our stops, in this case we can easily use a technical stop. It can be right here at the previous peak. So if the price suddenly moves up and the trend continues upwards after this side move that we can see here, then we can allow ourselves to lose about 4.5 points. That's not too bad. And the reason is, as I've said before, the smaller the stop, the smaller the risk. And of course, we have to calculate our take profit from the stop. So when we have a small stop, we can let ourselves have a small take profit and still fit into the 1-to-3 ratio for the purposes of our risk management and statistics. Now, if our stop is 4 points, let's say it's 5 points with the spread, maybe some slippage, 5 points, so they take profit, we have to take at around 15 points. So let's do that. If our entry is around, let's say 13,230, then our take profit should be around 13,215. This is all that we need to take if we have such a short stop. And remember that everything is calculated from risk. So in this case, it is beautiful. It is absolutely fantastic. Now let's see what happens next. And here, our take profit would have been taken. So our trade would have ended up being a positive trade, 1-to-3 ratio, 15 points taken. And trust me, when you're trading full futures and 1 point costs around $25, $30, taking 15, that's already around $500. So that's not too bad, right? Now let's remove the take profit, because as you can remember, there are two reasons to close the trade. It can either be the take profit or it can be a technical reason. And the technical reason is the same kind of a signal, but in the other direction. Let's see, it is working fantastically. See those stairs. Lower, 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 powerfully in the red zone. Here we were slightly in the red zone, but here more in the red zone and even more in the red zone here. And the MACD, it goes parallel to the trigger line like on tracks. This is simply fantastic. A really nice working downtrend. Now, as we can see here, some movement against us, but there is still no structure for us to worry about. There is no divergency and there is no signal in the other direction. Oh, boom, fantastic. And as we can see so far, there is still nothing to worry about. There is no divergency, we have only the convergency. If you can remember what the convergency is, then we can see that the price is moving down, the bottoms and the tops of the waves are lower and lower. And so the same goes for the MACD. We are going lower and lower and lower, and the stochastic keeps being in the red zone, and which is just fantastic. There are no divergencies in neither stochastic or the MACD. So absolutely nothing to worry about. But here, I would start to worry. Here, we have a divergency. So you can see this bottom wave, and this bottom wave, it is lower than this one. However, in the MACD, this is a signal in the opposite direction. Remember, this is a wave above the trigger, and the bars here, they confirm it. The same thing as we saw here, the wave beyond the trigger, here is a wave above the trigger. So this is a signal in the opposite direction. So this is a signal against our trade. Now, if we see in stochastic, then stochastic is still very powerful of going down. However, this bottom peak right here, it is not as strong as the one before. As you can see, it is diverging as well, but just a little bit. And in these kinds of situations, I would leave the trade. I wouldn't know how much against me this signal is gonna work. Maybe with the next candle it's gonna turn and go back into the falling trend and I should have kept it. I don't know, and quite frankly, I don't care. If I see something like this, a signal, a weak, but a signal against me, I will leave the trade. If we look at the bars, then in the beginning of this candle, this is where we'll leave our trade. And once again, from 230 down to 13,173. This means that we have taken 57 points. And this trade was from 11 o'clock, 12 minutes until 12:21. So about an hour. And remember, as I told you before, that these trades that I have, intraday trading with indicators with 1 minute and 5 minute combination, and we will talk about the 5 minutes soon enough. But as I've told you before, that these trades, they don't last very, very long. But as you can see in today's market and nowadays, 1 hour is equivalent to 57 points. And if you're trading one full futures, once again, and it's quite easy to get to the point where you will be trading one full future and you will be making with 57 points, well, let's do the simple math. $25 per point, 57 points. This is 1,200. This is $1,425 in 1 hour. And this is what I work with on a daily basis. And this is what the trading is all about. But remember, at this point, I must warn you once again and remind you that these types of signals, on a nice day, they work like this and everything is fine and you will be making ridiculous amounts of money and points per day with just indicators. But there are days when these signals simply do not follow because the market is slow, it's not moving, it's got no range, it's got no ATR, and so on and so forth. So you will need many more tools to actually understand and pick out and choose the correct signals. The same signals, but you will need to be choosing and knowing which one is going to work. And only then you'll be able to trade any kind of market. So please do not, after this lesson, rush to your platform and trade with money, because you will most likely lose all of your depot, or you will just sustain heavy losses. So I am forced to tell you this once again. Before you completely finish this learning program, do not rush to trade with money. This right here is already something, and this is something that you can trade with, but please, when you do, and I really want you to practice this, the more you practice, the more you'll learn how to work with the market and get used to this job in general. But do not trade with money. This is yet not enough to be able to make constant profits. Maybe you will start working with this and you will get lucky for 2-3 weeks, just like the story I've told about one of my students, and you will make a lot of money. It is possible. But let's not take that risk, and please first finish the whole program and you will know how to trade in any kind of market and how to pick out which of these signals is a good one or which one is not, because the indicator itself will not tell you if there are hidden issues in the market at a given moment that would prevent you from taking this certain signal. The indicator only gives you a mathematical calculation and gives you a visual line. And based on that line, if you are working with it, you might get lucky, but there are many, many more things that you should know. Now, let's take a look and see what happened after we left the trade. And as you can see, we did a correct thing. And actually, the next signal, as you can see, is this is also, we have to, this one is one of those more difficult ones that I was telling you about. This is the one that it's quite difficult to see, but if you're looking at the bars, you will see that at the beginning of the next, of this candle would be our entry into climbing. And this here is a fantastic hook in stochastic. It is absolutely marvelous. I love to see these hooks above the neutral zone. And when we are in green like this, it shows us power. So as you can see already, here we had some side move, here we entered into falling, and here we had a really, really nice working trend with no divergences, with no weaknesses, with nothing like that. And the same thing was in stochastic, we were picking up speed as we went into the red zone, and it stayed in there right until this moment when it showed us a small weakness here, plus the MACD wave above the trigger, which made us leave the trade. If you can remember comparing the tops and bottoms of waves, then you can see that this wave went above the previous top wave, which means that our trend might be turning. And now it was followed by another wave, which the bottom is higher than the one before, and we also have a really nice signal in MACD right here going up, and a beautiful stochastic, and this is the entry for climbing. And this is pretty much the general concept of trend hunting and identifying trend weaknesses and seeing how they work out in relation to one another and the waves in relation to one another. And it is, most of the time, it is working like magic, absolutely like magic. And I love working with indicators, and especially on a nice day, these things can produce fantastic results. In the next lesson, we'll talk about the exits and how to add and consult a major trend. Good luck on your test, enjoy your homework, and I'll see you in the next lesson.